Property investment tips for beginners. So these will be my 5 top tips for beginning investors if you're looking to get into the real estate market. So these are what I've learned over 30 years, a 30 long year period of investing in the property market. So my number 1 tip is know the property cycle of the capital city that you're going to be investing in. So I don't want to overcomplicate this, but basically a property cycle lasts for approximately 18 to 20 years or thereabouts, okay? Now within that cycle, you'll get around about 7 years of growth, 7 years stuck together, consecutive of growth, very strong growth in a capital city in Australia. And then once that growth period is over, the market has peaked, then it generally can take like a decade. Perth's just had like a 14-year hiatus from its last peak of its last growth cycle before it starts growing again. So that cycle, you want to make sure you're buying at the right time so that you benefit from those, 6 or 7 years or so when it grows very, very strongly, okay? If you buy at the peak or sometime just after the peak, you can have a very long time. You could buy the best property known to man, but you can have a very poor result because you bought at the wrong time. However, if you bought the worst property at the right time, you're going to do very, very well because the most fundamental thing about buying property is knowing when to buy in the cycle. And it might just pay to let you know that not all of Australia's capital cities are in the same cycle at the same time. For example, Perth is generally about 180 degrees different than Sydney, for example. So when Perth's doing well, Sydney's not doing so well, and generally when Perth's not doing so well, Sydney is doing well. So just keep that in mind. It's the most fundamental thing as to whether you'll do well or not. That is number 1. Okay, so number 2, buy for growth, not income. In my opinion, you're buying for growth, not income, because growth will be the game changer. That will be the thing that will change the game for you the most. Okay, when I was investing during the last growth cycle, I made over $900,000 in capital growth just in 1 year. So cash flows can't do that. So you need to be thinking of investment as 2 sides of a coin. One side is the growth, and the other side is the cash flow. Right? The cash flow is there to drive the property. It's the thing. It's like under the hood of a car. It's there to drive the property while you're attaining the growth. Okay, but the growth should be the thing that you aim for to really change the game financially for you. Number 3, third point is, drum roll, major cities, not small towns. Okay, please don't start looking into small towns because in some cases they're cheaper, or holiday towns, or even mining towns, because they all have their own problems in a way. So if you say you went out to the wheat belt, for example, and bought into a small town, quite often they're very stagnant, they don't grow that much. And like I said to you before, growth is the real reason you're investing. So quite often they have higher rental returns because more people are renting there than actually owning. So that creates its problem itself. Mining towns, of course, they're stuck generally with one big industry, and you can be paying over $1 million for an asbestos house because it's getting $1,800 a week rent. People get caught into that. If that rent drops, the value of the house drops as well. And that's because the rental yield is determining the value of the property. You want to be buying in the larger cities where the determination of the value of the property is from owner-occupiers, not by speculators or investors. Okay, so stick to larger towns. You'll be much safer, and I think you'll find your outcomes are a lot better. Point number 4 is lock and leave. So lock and leave style properties I've found have been over time invaluable to me. You can buy the property, you can put it to one side, you can forget about it, and it does its thing. You wake up 10 years later and you go, hey, wow, this property is worth a lot more money. So once you start going down the track of getting, and I've done this myself, you go down the track of getting properties that have got large backyards, etc., and you're hoping the tenant looks after them, and that doesn't always happen. It creates hassles for you. If the property is going to create hassles for you, then you're more likely to go, this is too hard, and get out of it. You want property investing to be easy. So if it's easy for the tenant to look after, i.e. like a lock and leave style property, it's going to be a lot easier for you as well. So our last point And number 5 is know the cash flows of the property before you purchase it. So you want to know the pre-tax cash flows and the post-tax cash flows of the property. So before you do your tax return and after you do your tax return, because you'll get tax benefits from purchasing an investment property. All right, so you want to understand that, because once you've bought it, that's going to be the first thing that affects you, the cash flow. So quite often you'll need something like some kind of software program that can work that out for you, because you need to take into account a lot of things: how much you're borrowing on the property, the rate, the interest rate on your loan, what kind of rent return you expect to be getting, your bank costs, depreciation rates, of course your own personal income if you're buying in your own name. It works out your tax returns based on your own personal gross income. So software programs you can get that you can put all that information into, and it models it for you. You can even change things like the interest rates, etc., and kind of stress test it to some degree. So they're very useful. I always do that for my clients before they buy an investment property, because, like I said, cash flows will be the first thing that affect you. So you want to understand those. Okay, so they're my top 5 items that I think you should really keep in mind and think about before you buy your first investment property. So I hope you like the video. Please like, subscribe, and click the notification bell so you get notified of any of my extra videos that are coming through the pipeline. And of course, I wish you happy investing.